Hello and welcome to another update video about Chainlink. We take a look at the Chainlink chart today. As we generally don't have too much movement at the moment in the crypto space, want to take the opportunity to also take a look at the longer time frame chart, the longer term chart, and the overall, the overall long-term target actually for the next all-time high. Maybe let's start with that. So overall, the chart is basically in its first larger 1-2 setup here. It made its wave 1 to the upside back in May 21, peaked here at around $53–54, and is since then coming down in a WXY corrective structure. WXY, by the way, is a more complex corrective Elliott wave structure where each of these waves has 3 subwaves that is different to an ABC. ABC is the most simple wave structure. The WXY is a little bit more complex, but we see that in the more complex market today more and more. Overall, here to understand that we are in this so-called Y wave. So we have the wave W, we have the wave X, and we are moving down in the Y wave. And interesting is that the Y wave obviously consists of a wave A, a wave B, and a wave C. My view, we are putting in the wave C at the moment, and in the wave C we have 5 waves. So we've done here a wave 1, 2, 3, 4, 5. And the wave 4 was a very, very long triangle. We talked about that, but in my opinion we have, we haven't broken it yet, but basically I think we're on a good way to breaking it. That would be in line with my primary expectation. I've been talking for a long time about the situation that we should get one more low here. I would really like to see that for LINK. I mentioned a while ago there's actually one of the most bearish setups here we have in the crypto space, but it's also the chart that really took a long time now to finally break to the downside. So we take a look at that in a minute. One of my viewers and subscribers, MN Steady, asked me if I could take a look at a pattern from Bitcoin in the last bear market, which was here 2019, 2018, 2019, where the chart also made something very similar. And as you know, with Elliott waves, it's all fractals and chart patterns repeat each other or repeat themselves. So here you can see that, where we have been coming down from the wave 1 high to the downside, WXY, and especially important here, this long sideways range, which has lasted since or started in June and is basically continuing into today. So July, August, September, October, November. So 4 to 5 months we've got here. And looking at this chart, you can see the very similar structure. Maybe this was even a WXY structure as well, where we also had this very, very long sideways movement. And funny enough, this also started in June, really. Depending on when you start here, really. Let's just compare that. But yeah, no, why not? You know, we could argue this also started sort of in June here with this sort of long and boring sideways move, and it was finished sort of 14th, 15th of November, right? So let's see if we see another sell-off very soon. But basically, the idea was, you know, it's a very, very similar chart structure, very similar pattern, where we also, but it was squeezed much more. I mean, you could even say this started way earlier, really. So, but we had a massive descending triangle here, very obvious one. And here with LINK, we had also a very, very obvious, you could call it a descending triangle or a symmetrical triangle, really, but a trend continuation pattern that would usually break to the downside. Now it hasn't really fully broken yet, and the reason why it hasn't, I'm telling you as well, because when you have an Elliott wave triangle like that, A, B, C, D, E, you would expect it to break to the downside, which it also did, yeah. It avoided very, 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 very closely to break above the wave C high. That would have messed the chart structure up, but because it didn't break above the wave C high, this is still a valid triangle, and we're looking at the impulse now to the downside. But you want to first of all get an indication that it's really broken by breaking below the wave D low. That's the first indication it's broken, which we did, you know, we broke below that level, but the confirmation will really only be obtained as soon as we go below the low of the wave B. Now that is at around $5.30. Now I've been waiting for that now for a while. We're still not there, but very close. I've got a bearish target there, 290 to 350. Now that would be the ideal target, but let me tell you, we don't really need that. If the wave E high was really here, then we have a chance to just, it's enough to just go below the B wave low. Yeah, we don't really need to go much below 530. It could be at $5, this thing is over. But if I look at the subwaves now, it would suggest we come down a bit lower, because I can count this as a wave 1 to the downside, which bottomed here at around $5.82. Then here a wave 2 to the upside. Normally I would say we come down now in the wave 3. Problem is that the move down wasn't really impulsive, so I'm actually looking at the possibility that we get an extended wave 2. And that what we're doing here is just an A, B, and wave C to the upside, a little bit like the ADA chart. So A, B, and now C up, with a possible target around the 750 level, right? But the point is, if we already break earlier below 570, then I think we're going to retest 530 and will come down lower. So for me at the moment, there is absolutely no signal here that this is turning around and going to the upside. If it does, I will of course make you aware, but for me the trend is at the moment still down. There isn't really anything bullish on this chart until we break back above 963, and even better would be a move above the $11.50 level. Okay, and that's my update about Link. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.